Now, this might be a story that could resonate with you. Millions of homeowners are being warned that they may not be able to move house because their potential deposits have been wiped out.
The fall in house prices over the last 5 years has dramatically cut the amount of equity that people have in their property. And according to some experts, it's causing a bottleneck in the housing market.
5 or 6 years ago, Castle Vale in Birmingham was a popular place for first-time buyers. Properties were relatively cheap, and many people bought flats they thought would put them on the first rung of the property ladder. Helen Ryan was among them. 5 years on, she's planning a family with her fiancé and needs to move. But the flat has fallen in value so sharply that she's lost most of her deposit of £16,000. Now she needs to save that all over again.
And it's been really disheartening. I know when we had the valuation on the flat and we found out that we had lost so much money off the value of the property, it was hard to swallow.
Today's report says so-called second steppers, those trying to move on to their second property, are facing the toughest market for more than 25 years. Back in 2005, they typically owned more than 40% of their properties outright. In 2012, the average equity they hold is down to little more than 5%, wiping out their savings.
I think people will be shocked when they, approach their mortgage lender and ask, about taking on a bigger mortgage to move to a bigger house and find actually the value of their property has fallen so much that they have very little equity in their homes, and it might be impossible for them to move on.
Now imagine for a moment you're a bank manager deciding whether to lend the likes of Helen Ryan any more money for a mortgage. Back in 2007, that wouldn't have been a problem. House prices were rising, banks would easily have got their money back. But since then, house prices have fallen by 19%. The risks are very much bigger. As a bank manager, you're either going to ask for a bigger deposit or you're not going to lend at all.
Now banks, to get the best rates, are often looking at 40% deposit or a minimum of 10%. So very difficult, with no price growth in a lot of areas over the last 5 years, for people to actually look to trade up.
That leaves millions only able to dream about moving house, with the most pessimistic experts expecting a further drop in house prices this year and next. Their predicaments are unlikely to improve. Brian Milligan, BBC News, Birmingham.
So let's take a look at the options if you are found in this situation. With us is Yvonne Goodwin, who's an independent financial advisor. Good to have you with us, Yvonne. Thanks very much for coming in. So we're not talking about negative equity. We're talking about the amount of equity in the property shrinking. And I suppose many people would just think, actually, I'm just going to stay put. Is that the best solution?
For some people it is, because there's no easy answer to this, unfortunately. The house prices have dropped, and the other problem that wasn't referred to there was the fact there's a lot of people 5 years ago bought their properties on interest-only mortgages, so they've not been paying off any equity in addition to that, which means they've only got this tiny amount to move on with.
And that was at the height of the bubble,
yes,
when prices were going through the roof. People just overstretched themselves effectively.
Yes, and credit was easy to get, which it isn't so easy these days. And because it was that much easier, people tend to do it. And what had become normal was to move on every few years, with your house having risen in value. And of course, that doesn't happen anymore. We might be in what's now a new normal compared to how it was, say, 10 years ago.
And some people perhaps say it's better that credit isn't as easily available, but still credit is available. The banks are willing to lend, but you have to negotiate just that little bit harder now. How do you do that?
You do. And if you're in that situation where you're wanting to be a second stepper, then the first step is to speak to your existing lender. Tell them what you're trying to do and how you're trying to do it, and see what they can come up with. It might be that you have to stay put a bit longer and save up a bit more so that you have got more of a deposit, because 10% is really the minimum. There are a couple of lenders out there that might lend based on 95% of the property, but you'd be paying a lot more interest than you would with a bigger deposit.
And presumably the fact that the whole market is dampened down means that prices presumably will continue to fall. Therefore, for people who are caught in this particular sector of the market, the problem is not going to go away.
No, it's not going to go away at all, because I see problems at the other end where people are trying to downsize and they're having problems selling their properties because of this jam in the market.
I wonder if we'll see, I mean, you tell me, will we see more people thinking, actually, I'm just going to invest in the property I have at the moment, so perhaps redo the kitchen, the bathroom, whatever, stay put and just hope that that adds value for the future?
They may do that, but also if they speak to their existing lender, and if they are still on interest only, and there are a lot of people still on interest only, maybe start making repayments off your mortgage, because at some point you are going to need to pay off a mortgage and retire.
And you've got to nibble away at the debt at some point.
That's right. Yeah.
Yvonne, thanks very much indeed.
Thank you.
Good to see you. Thank you.